Family, I think I'm on. I never know for sure. I just want to take this minute just to say thank you for all the support, all the love. Thank you for the likes. Thank you for the comments. Thank you for the shares. Thank you for the questions. It feels really good to feel like a valued member of society, and I sincerely appreciate that. I have only traded Bitcoin once or twice. Okay, but it is of my opinion that Bitcoin is strictly a volatility play. And so what I mean by that is there's nothing really tangible tied to Bitcoin. It is literally just gambling. Okay. When people are scared, they take money out. When people aren't scared, they put money in. I have looked at some correlations in the other markets with Bitcoin, and though there's some correlation, I have not done the math to figure out what the mathematical correlation is, but I have a feeling that it's not close to one at all, meaning that it's not opposite the market and it doesn't move with the market either. It kind of does its own thing. Um, I will say that it probably moves closer with the market than moving opposite of the market than anything. So, what I did was a couple months back, I posted on Facebook that I was getting into Bitcoin at 8,000 and I was exiting at 10,000. And that worked out well for me. So I am very excited now that Bitcoin is down to something like 5,000 right now. And so I was literally about to uh, figure this out myself and then make my entry. And I thought, why don't I do a video about this? Because I don't think I've done a video before concerning Bitcoin. And you can see there we're currently at 5,200 as of March 14th. Today is the 15th, by the way. So anyway, I'm gonna try to take you through this fairly quickly, but please understand I am doing this literally live, okay? And I'm doing this for my own trading account. So if I go a little long, well, hey, it's my money, right? Okay. So what we're gonna do is first just gonna pull out an average. Now, when I say that this thing moves primarily on volatility, what I mean by that is that the the numbers will only move so much, okay, based on historical averages. So what we're going to do is we're going to figure out what the average is, and we're going to start off by doing this for like, I don't know, let's do 100 days, okay, and let's just see kind of where that takes us, and then we'll look at the averages for 50 days and then 20 days, and just see what the differences are in those numbers, and then we'll decide kind of which one we want to go with. So I'm just going to put 100 there, and I know I clicked this already. Why is it taking so long? There we go. All right. Now, I want to say just real quick that the averages that I'm using, there are some standard, averages that I'm using. 100-day is based on roughly 2 years, and 50-day is based on, like 60 days. Okay. 20 days is based on 1 month. Anything smaller than 20, and you really get into like a lot of noise. Like trying to look at something day to day or week to week doesn't really help much. You really need a longer time span to really look at things. This is not what we call what is it called? Day trading. Okay, this is not trying to make money on pennies movement. Okay, what I'm doing is called swing trading. So I want to see like that, like I told you, that $2,000 move from 8 to 10. Right, that's where I want to make my profit, not between $5 and $10. No, no, no. I need to see a big movement, right? And so that's why we're looking at longer time spans. If this trade takes 30 days to mature, 60 days to mature, 90 days to mature, I don't care. I have the money sitting there not doing anything else, so why not? Okay, that's what this is about. Okay, so look at 50 days. And then I don't think we're going to use the 20-day, but I'm going to pull it up anyway, just so that we can see the difference. Okay. Just so we can see the difference, because you never know. You never know. All right. And right away, I'm already thinking that I need to kind of redo this, because uh, my my current dates are at the bottom instead of the top. That's my fault. But in the interest of time, I'm just going to deal with it. Scroll down to the bottom here. Get to it. All right. Thing goes so slow when I'm streaming. Come on. I did, and here's another thing. I only pulled a year of data. Okay. Typically, 3 years is ideal. I pulled a year because with Bitcoin, it only really has about a year of history. Before 2018, Bitcoin was not traded very heavily. So the price was like at 1,000. And so we want to pick up Bitcoin when it actually started trading a lot, doing a lot of volume. And so that's why I only elected for a year. Maybe I can go 2 years, but I think a year is good enough. All right. So what this says is that the average. Yeah, no. See, we gotta fix this. There's no way. All right, so let's do this. I think I can leave all that alone and just here. All right. Yeah. Uh, column A. Oh, come on now. Let's. And let me choose headers. Try it again. All right, there we go. Hold this. All right, and that is how the sausage is made. Okay, so let's go back over to our averages and make sure these are still okay. Yeah. All right, so here we go. So 100-day moving average is 8,000, 50 is 9,000, 20 is 8,000. Okay, and so clearly we are under that moving average. Okay, and I see here the 100-day is 83, 20 is 81, so it's very close. But the 50, which remember is the last 2 months, right, is much higher at 9,000. And what that means is that longer term, this price has moved up. Okay, and I think we can look at a chart to clearly see that the price of Bitcoin has moved up more than it has moved down. And so that's the reason why longer term we see that the average is higher. I'm sorry, that the average is lower than current. Okay. However, in the past month, right, the price has dropped dramatically. So that's the reason why the 20 is very close to the 100. Okay. Um, what I'm going to do now is just see what the difference is between the average and the closing price. Okay. And it's very simple. All we're going to do is we're going to take the closing price. Okay. Going to subtract the average. Okay. And then we're going to divide by the closing price. Come on. And then what that's going to do for us is it's going to give us the percentage that the current price is over or under the average. Okay, so as we can see here, so as of March 14th, okay, the price is 61% below the 100-day moving average. All right, and we're just gonna slide that over for the other averages. All right, and then we're gonna bring this down. Okay, now right away we start to see a trend here, right? So we see all three are about the same. They're in the 50, 60, 70% range. And then you see a big drop off. See this? See a big drop off. Okay. Now, here's what we're doing. Okay. We're looking for what happens when this thing goes below the moving average. What happens when it goes above the moving average. Okay. So that's what we're doing here. Very simple, very straightforward. And I'm going to quickly do this. And then we're going to freeze. We can see what we're looking at here. My goodness, I forgot how to freeze that fast. Where's it at? Page layout, view. There we go. These panes. All right. No. Why? Here's top row. Okay. That's better. All right. So we're going to kind of have to look at these separately for now until we can get a good idea of really which one we're going to go with. So we see here, this is the 100-day moving average. It goes from positive to negative here. And when it goes from positive to negative, we can easily see, and let me do this. That way we can see this one too. All right. So when we go from positive to negative, okay, what we're looking at is the price action. Okay. So what happened on that particular day? So again, we go from positive to negative, and we see the price went from 89. It just dropped precipitously all the way down, all the way down. Okay. So let's see what happens when it goes from negative to positive. Let's see what happens. I need to come down quite a bit. All right. See this? See this trend? See this trend? Look at that. I mean, it's clear as day. You can see it. The numbers got up to what, like 14, 15, and then 21 even. Got pretty high. So it got up to 21. And we'll go back and double check that by pulling the high. But either way, it got up to 21, and then it just dropped off. So let's see what happens when we go from negative to positive. And now we're in the single digits. You see it jumped around a little bit. Okay, here we go. So we're looking for a clear trend, not here where it's positive, negative, positive, right? So we want a clear trend. So look at all these negatives, right? And then we go positive. Now, what happens when that happened? Okay, so right here, we see the price went from 77 and it jumped all the way to 89. Yeah, roughly 89. And we can come up with an average of where it actually stopped. But, Yeah, of course. I mean, it's gone up as high as 10,000, I'm sure. All right, when it got around to the 21%. Okay, now what we want to do now is we want to see how many times this has happened, okay? Because if something happens once, that can be a fluke. If it happened twice, that can be coincidence. If it happened three times, that's the Trinity. We know for sure we have a verified trend, okay? So now we're looking at what happens when it went from positive to negative. And we're expecting it to do the exact same thing that it did the last time that we looked at this. Let's see what happens. All right. There's not quite a trend, so we got a couple. There we go. Let's see. So we went from positive to negative, back to positive, single digits, and then it stayed negative, and it went negative all the way down to 30. Never made it past 30. Okay, so again, we're keeping that in mind. So the first number is 21 positive, 30 negative. All right, so we're gonna keep that in mind to see if that as well remains the same. So now we're going to um, positive to negative, which is about here. And we see we got up to 10,000, right? And it precipitously dropped from 10. Oh, wait a minute. Going from positive, negative, right? How long was it negative for? Uh, okay. Yeah, kind of jumped around a bit, but I think that's good enough to call it a trend. Make sure that's positive. Yeah. So we get it to double digits now. Okay. So let's go back up. All right. Positive to negative. Okay. So again, we got up to 10,001 and we see drop almost immediately to 95, right? And like I said, it jumped around quite a bit. So we got back up to 10.5 and then dropped down and then it went negative and then a big jump down to 8,000. Okay. All right. So let's keep going. What happens now when we go from negative to positive? So again, we're expecting the same thing to happen. We're also keeping in mind looking at where this thing tops off at. Okay, so 21 was the number before. Now we're seeing that it got up to 23. Okay, so let's keep going down, 23 again. Now we're looking at 33, 36, 39, almost 40. There's 40. There's 40. Another thing I want to mention here, and this does come into play here. Remember, I told you that prior to 1817, Bitcoin was not trading very much at all, which is why we only have so much historical data to work with, and that is evident here when you look at the volume. When you go up to the top, and 20. This was what was this? This was 2019, June 2019. You see, it's only trading like 1.8 million or 1.8 billion. I'm not sure what the number comes out to, but anyway, now we're up to like 3, 4, right? So that makes a big difference. We got double the trading volume. Um, all right. So again, got up to 40. All right. Now we're down to the teens. All right. Now we're single digits. All right. We're at 0. Okay, that's it. So we only have a year. And this one went below the 1 mark. So this is not a lot of volume at all. I am tempted to go back and grab another year, but it's going to be so much less volume that I'm not sure if that's gonna help any. So based on the 100-day moving average, we know that it can swing anywhere between roughly 40 and 30. The average on this thing, let me pull that real quick. So, the average on this is 5%. So anything below 5%, we can say is a downtrend. Anything above 5%, we can say is an uptrend. So from -5 to +5, it's really zero. Okay. But what's important here, though, is that currently we are at a -60. Okay, we're at a -60. That is unprecedented. Have not seen that before. Okay, at all. Not on the 100-day anyway. Looking at the 50, we're at a -74. Made it to a -84 at one point. And I'm just curious now to see if I can find anything smaller or larger. Let's see. So of course 84 is the smallest. Let's see what happens if we take this out. Second largest is 74. Let's take that out. Third largest is 64. All happened within the last couple of days. Okay, so before the last couple of days, the lowest it ever got was a -27, which is really close to what the 100-day was too. And then let's take a look at the largest. The largest it's ever been is 35. So again, that correlates with the 100-day moving average, which was 40, right? So I'm gonna go ahead and pull these out for the 20-day and do the same thing here. All right, so 23 is wait a minute. Hold on, let me make sure. Okay, there we go. So -23 is the smallest. And I'm gonna put these up for comparison. Pull this out. Yeah, so I mean they're about the same. 150, 20, it's all about the same. So let's now compare the max and just see kind of where that puts us. And so, yeah, again, about the same. I would say that the 20-day is much smaller just because in the last month, price action has not been very positive. So I would still say on average about 40 is what that average comes out to. All right. So, I mean, with that being said, I mean, we are at unprecedented numbers right now. Okay. I can go back and pull, the last 2 years because I'm pretty sure we've had some crazy price action in the past uh, to kind of that's similar to this. To maybe give us a better idea of what happens when we have this kind of practice, because we don't have any historical data to tell us what happens to Bitcoin after these huge drops. This has not been seen in the past year. So let's go quickly out to our Yahoo. And I'll tell you something else too. I was also thinking about pulling historical data from a couple different places just to make sure that I had good data. I'm using Yahoo, which isn't always the best. But oh, come on, which isn't always the best. But I think for these purposes, I think it works. Let me see if I pull up Bitcoin myself just to make sure that it's not anything too crazy. Let's see, 1 week. So Sunday. So Saturday. I think they're officially closing this thing at maybe 3 p.m., but I can't be certain. It was at 51, and we show a low of 51.25. So that's very close to what I have here on Cash App. Cash App, I'm showing a low of 51.46, and Yahoo has the low at 51.25. So again, different data places are going to have different numbers, but like I said before, I don't think it's going to be so off that we won't be able to spot a trend on this. All right, so anyway, let me go ahead and pull this. This is going to be 2 years now, just to see if there's some precedent for this. See if this has ever happened before. And the reason why I'm doing this is because even though we can see a trend clearly, right? Because I don't have right now any historical data telling me what happens after such a huge drop. I don't want to just say, "Oh yeah, I have a trend, let's go," because like I said, Bitcoin doesn't have anything tangible that it trades on. So, I mean, it's very possible that after such a big drop like this, the market may lose complete trust and faith in the asset, and it may never recover. So that is something that we do have to think about and consider. But like I said, maybe this has happened before. You know, um, and again, I'm only going back 2 years. I don't want to go back too far because I think it's going to really throw off our numbers. Even going back this far, honestly, I'm expecting it to really mess with our averages. But in this situation, I don't think I have much of a choice. And so what I'm going to do is I'm just going to grab these numbers from this spreadsheet and throw them into this one, and then bring my formulas down and see what we have. And did I grab the right date is another thing. I think I did though. Yeah, March, no, I messed up. Let's see, it's March 13th. I'll just delete this one. All right, these 20, 50, 100. And now that I have these extra data points, kind of curious to see what happens at a 200-day. All right, let's go back to the top here and let's check our min and max again and see what we get. All right. So let's bring this down to 1,000. I wonder how 499 got there. So I swore I put 500. Didn't. All right. So there we go. Hasn't changed one bit. Hasn't changed one bit. Let's see what the mean is now. It's the smallest. Oh, wow. Oh, wait. Well, of course, got to get rid of the last couple of days because last couple of days is unprecedented. Okay, look at this. So we did get down there before. So now what we want to do is we want to go find this number. Where the heck did it ever get to negative 78? Okay, all right, I understand. Went too far, I apologize. I think I have to do 0.78, let's see. It didn't work either. The heck? If I just do that. Okay, now I'm thoroughly confused. All right, so let's roll up here. And we're gonna look for negative 78, which we know for sure is gonna be past 300. There we go. All right. So looky here. Look at this. My goodness. So we have definitely been here before. Definitely. Now, back then, it looks like the 20-day wasn't as bad. Wasn't as bad. Oh, look. Whoa. Yeah. Got real bad. All right. So let's see. When was this? This was November of 2018. I think I do recall. Oh, look at the volume too. Oh no, this is plus 10. I mean plus 9, not plus 10. So see, the volume is still like very low compared to today. But um, I don't even know mathematically how to compare that. That'd be 4 plus 9 zeros versus 4 plus 10 zeros. Okay, just curious for my own. 1, 2, 3, 4, 5, 6, 7, 8, 9. All right, so that's 4 billion versus 40 billion. So yeah, that's 10 times the volume, something like that. 10 times the volume. So that's crazy. Can't compare it. Um, but I think we can still sort of look at what happened, right? So um, let's take a look if I can get this thing to move for me. All right, so 4,000, and I mean basically let's go back. Let's go back. Let's go back. Let's go back. All right. So we can say based on our numbers for the last 2 years, negative 15 is normal. Okay, negative 15 is normal. Once we get into the negative 33, that's when things get crazy, right? So let's look at the price. Okay, we're at 48. Okay, came down from 6,000, but let's not care about that right now. So 48. Let's see what happened after that. It drops. It drops. It drops 1,000 points. It drops 1,000 points. It drops 1,000 points. Oh, look at that. It drops 1,400 points. 1,500 points, 1,600 points. About 1,600 points. And it stays there for a long time. for a long time. Now I'm saying long time, okay? Now these are daily historical numbers. I know you can't see the date on the side over here, but each row is a day, so it's not a long time, but man, so far it's weeks, right? And it just stays down. Just stays down. There's like a day or two that it popped. See that at 39? But man, from 48 to 38 fast, and it stays there. And even when we go positive, it's still really down 1,000 points. Um, you know, so it's and that's just the law of averages, right? Because the new lower number is now the average, right? Like it's just normal to be at 3,800 when before it wasn't. All right, so now we're finally starting to see some change here. And I'm gonna go ahead and get rid of these because we haven't really been looking at the lows and highs. Um, that may be important here in a little bit to see what the big difference is on a day-to-day basis. Like, did the price swing 1,000 points in one day? Did it swing only 100 points? Right? That can be important. But for now, this thing stays down from November all the way to March. That's 4 months. 4 months. And again, if I don't want to go back too much further on this, because the further you go back, the less volume you get, and the less unlike Bitcoin is compared today to then, right? So we see now in roughly April, May of 2019, we see this surge of investing coming in, right? So we see that the volume has really picked up. So now it's up to, I guess this is 10 billion versus 10, 20 billion versus just the 1 and 2 billion, right? And we see the numbers have jumped to 20%, but compared to where it came from in November, right, 5 months prior, you're still just now getting back to zero. If you put money in November of 2018, it's not until April of 2019, which is 5 months, that you're even back to zero, right? And then now we're starting to see some increase here. Okay. And it stays positive for quite some time. And now, based on this, we can kind of go back to say, okay, so what happens when it goes from positive to negative? But I mean, we kind of already, so it got up to 42, 43, 40, right? Is our, so what I would say after looking at this for the last 20, I mean, not 20, for the last 2 years looking at this, I would say anytime that the price goes above 40% of its 100-day moving average, it's time to sell, right? Anytime it goes below the roughly 30 moving average, it's time to buy unless it goes way below that 30%, and then it's like, nah, stay away, okay? So that's exactly what I plan on doing. I'm staying out of it. You know, like I said before, I have some cash sitting in my cash out, and I was really excited to put some into Bitcoin to make some money, especially after my confidence level rose from the last trade. But no, the numbers don't lie. Okay, anytime that this thing takes a big knockdown, it stays down for quite some time. It makes sense because, like I said, there's no intangibles tied to this thing. I'm sorry, there's no tangibles tied to this thing. It's an intangible derivative. It's not even a derivative because derivative is derived from some tangible thing. So this is just a volume play. It's just people who buy into it because they feel good, people who sell it because they feel bad, basically. And so there's nothing underlying that. There's nothing to say, oh, okay, well, this is doing this, so Bitcoin will do this. There's none of that, right? This is based simply on emotions. And because it's based on emotions, it makes perfect sense. If people are scared and take a bunch of money out, well, emotionally, you're gonna start taking money out too because you don't want to lose money. And what's gonna happen is it's gonna get down so low, possibly, right? It's possible that it's gonna get down so low that just like what happened um, here. I mean, look at this. You can see it. It's crazy. Look, March 9th of 2019, the volume went from one, I'm sorry, from 10 billion. Wait a minute. Still doing this wrong. Still doing this wrong. 8, 7. We got to go all the way back. So, all right, here we go. So it went from, let's just stop here. Let's just stop here. It went from 5 billion, okay, to 10 billion in a matter of, 4 months. Okay. And that's what, and look, I don't know what happened on that day. I'm pretty sure if I wanted to, I can do the research, look back in the news stories and find out what happened. But something happened to cause a bunch of people to start buying Bitcoin. Something happened, right? And we can almost pinpoint it. It happened right around here. Because before it was like 5 billion and then it just jumped like almost doubled. It did double within a matter of a couple days. So somewhere in February of 2019, people started buying Bitcoin, and that's what shot the price from 39 all the way up to 10,000 eventually. Um, but so I'm not even going to go further in analyzing this. My decision has been made based on what happened in 2018 when you have a big drop in Bitcoin. It stays down for a while, and the new low price becomes the new average. And so the average, remember, is what the price actually is. The price can jump around um, all day long, but the average is what the price actually is. It's either above that average or below that average. And so what we're waiting for now is for something to happen. Something to happen for people to say, "Oh, Bitcoin is so low, let's buy it." Right? Um, that may happen tomorrow. I don't know, but I'm not going to chance it. I'm going to stay out of it. I'm going to wait for it to come back to maybe this 8,000 mark. I'll look at it again when it gets close to there, and then decide to jump back in, or maybe even 7,900. That seems to be where it kind of stopped when it started going down. So anyway, that's it for me to you. I'll holla.